right, good morning everybody and welcome to another session here on Facebook Live. My name is Patrick France, Senior Instructor. Glad to be with you all today. Hopefully everyone is doing well. Today we've got definitely a important topic that we're going to be discussing. So welcome. Glad everybody's here. You're not going to want to miss out on this. We're going to be taking a 30,000 foot view of the market right now, or today. Whereas usually we look at, more of what's going on, individual stocks, that sort of thing. Today we're going to be taking a look at the broader view of the market to see exactly what's going on and how we can adapt our portfolios to really take advantage of this. So first off, good morning, Jim, Jay, Cedric, Danny, Reza, Shakar, Jeannie, Jay, welcome, John. Glad you all could be here. Wahid, Joe, Dougie, hey there, Jay, or Joey, see you in there. So welcome everybody. Hopefully everyone is doing well. Before we even get started, as always, I just like to make sure everything sounds good. Everybody can hear me. You guys see the video. I don't want to have any issues with that. So I see Joey letting me know everything's looking good and sounding good. Perfect. That's what I wanted to know. So awesome. Thank you guys once again for being here. For anybody just tuning in for the very first time, every Thursday we go live here on Facebook where we specifically talk about the VectorVest Stock Advisory app. It's the most comprehensive mobile app to help manage your portfolio, help you find new stocks, help you know when to get out of the market, when to get back in, anything and everything that pertains to trading or to investing. We've got you covered here. So if you're new or if you're not already a subscriber and you like what you see, you want to try it out, I do have a link in the pinned comments there that you can click on, download it for 2 weeks free trial access there. And if you like it, you can continue with it. If not, there still is a free version. It's a pretty light version, but we still offer a free version. Also, for everybody who's been here for a while, just to give you a little heads up, today's going to be a little different than the way we typically go about things. We are going to be getting into VectorVest 7 a little bit more here today. So if you're on just the mobile, you will be getting a glimpse into what the desktop app can also help you provide. There is some different abilities with the desktop application. So, it does have more functionality, but they combine with one another very good or very well. They work with one another about as best as you could ask out there. So with that all being said, let's go ahead, jump into it today. We are going to start to take a look at what's going on in the market. Then we'll get into our topic for the session here today, which is going to be a checkup on the health of the market. And then, as always, we will save the fan favorite till the very end, where we'll analyze any stock that you want to take a look at and show you how you can do that with the Stock Advisory app in less than 20 seconds. So with that, let's go ahead, jump right into it here today. So, as you can see right now, market is 3 ticks into the yellow. The market is neutral. VectorVest advocates caution when buying stocks at this time. No surprise there. We scroll down. We'll get to the market guidance videos in a little bit. I'll talk about them a little bit more in detail here in a few moments because those do tie into what our topic is for the session here today. But then we scroll down to the color guard where we get a detailed description on the overall market indicators that VectorVest uses to track the market. So the first one we come to is the price, which shows more of the technical side of everything. We want to see that price action is moving higher day over day, week over week. If it is, we'll typically see a green light in that price column. If it's not, if it's moving lower day over day, week over week, we'll get a red light. And if it's mixed, we'll see yellows here. RT, looking at the short-term price trend of the market, it's cast on a scale of 0 to 2. So above 1, the short-term trend of the market is up. Below 1, short-term trend of the market is down. As we can see at 1.1, short-term trend of the market tells us it's up right now. Then we get the BSR buy to sell ratio. The buy to sell ratio looks at the overall strength or health of the market as of right now. So it's looking at the number of buy rated stocks that we have in the database, the number of sell rated stocks in the database. Above 1 tells us there's more buys than sells or overall strength in the market. Below 1 tells us there's more sells than buys or overall weakness in the market. So at the BSR rating of 2.1, that tells us there's about twice as many stocks that have a buy rating currently than a sell rating, which shows strength to the overall market currently. And then the trends of these three indicators are combined on a daily basis to come up with our MTI, or the market timing indicator. So the MTI is looking at more of the underlying trend of the market. It's going to be on a scaling of 0 to 2. Above 1, underlying trend of the market is up. Below 1, underlying trend of the market is down. As we can see at 1.46, obviously the underlying trend of the market is now up. Now, since we are getting close to the levels, I always like to point this out in these specific times. There are key levels we always want to note with the MTI. And that's 1.5 to 1.5 to 1.6 on the upper end tells us that the market is starting to get top heavy. So with that being in mind, or keeping that in mind, at 1.46 we are starting to get to where the market is top heavy or starting to look for a top. It doesn't mean once we get to that level that we're going to see the market just quickly reverse and head south again. But it's just something to keep in mind that, on a short-term basis, you do want to be a little bit more cautious when we get to those lofty levels there. And then after that, we then get the trend column, which shows two parts of the trend each and every day. So the first part is simply referring to the short-term or short-term trend of the market, or primary wave. Simply looking at the weekly trend of the market, if you will. A simple way of looking at it there. So as we can see, it is up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part just reiterating the MTI, or the underlying trend of the market. Since the MTI is above 1, the underlying trend of the market is also up as well. After the trend, we then get the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market, and our last signal we get to get out. As we can see, we did get a confirmed up signal as of Monday this week and remain in that situation as of today. All right, cool. Seeing some comments going on. Awesome. All right, so after that, we then get the advance to declines. Now, this is a great intraday or daily indicator. If we see that the market is saying it's okay to buy, we typically like to check this here, the advance to declines, to make sure that there's a ratio of 2 to 1. So if the market's moving higher, we want to see twice as many stocks advancing than declining. If the market's moving lower, we want to see twice as many stocks declining than advancing. Right now, we're sitting at about 37% of stocks moving higher, 50% of stocks moving lower. So not really giving a clear day-to-day or daily indication on whether or not, the bulls or bears are winning right now. So as we scroll down, we then get the major indices, where we see the Dow's down just slightly, down about 0.1%. NASDAQ's down about 0.6%. S&P is down about 0.4. VectorVest composite down about 1/3. Now, if you're not familiar with the VectorVest composite, or you're not familiar with VectorVest, you're just tuning in to learn more about it. The VectorVest composite is an arithmetic indexed average of about 8,100 stocks that we track in the US market. We feel like this gives us a better representation on what's going on in the market, because it's not just looking at a small portion, such as, the Dow's 30 or the NASDAQ's 100 or the S&P's 500. This is looking at 8,100 stocks here. So we get a better feel for what's actually happening in the market, rather than just being able to see, the talking heads on TV talking about, oh, the Dow's up today, the Dow's down today. That's all they really ever talk about. They don't talk about the broad market moves, but here at VectorVest, we specifically want to look more at the broad market moves. Also, if at any point throughout the stream you guys are enjoying yourselves, or you guys are having a good time learning something, make sure to hit that like button. Make sure to turn on notifications on our Facebook page as well. Also, if you haven't already hit that share button, share it with your friends, share it with your family, because all that helps me out continuing to grow these sessions and continuing to grow the community that we've built here over the last few years. All right. So with that being said, we're going to jump into VectorVest 7 for a little bit here today, because we're going to be looking at the overall market climate. Now, if anybody watched the timing from last Friday, you'll know what I'm talking about here. But we call it the truth chart. If you're not already familiar with it, or if you're not familiar with, the essay from last week, or watching the video from last week, and you want to just go back and review it, as always, you can go to the more option at the bottom, choose the VectorVest views, and choose Friday from last week. And Dr. DeLito's essay, or the essay from last week, was the Case 7 bear market scenario. I'm not going to read it for everybody here today, but at the same time, if you want to get in and you want to take a look at it, this is how you can go find it. So we're going to jump into VectorVest 7 to make it a little clearer for everybody to see exactly what we're talking about by the K7 bear market scenario. And then we'll show you how that pertains to the mobile app. Everything comes back around, if you will, and we'll show you how that pertains to the mobile app and how you can keep track of this going forward. All right. So Ross is saying real quick before we even get into it, app predicted the fall back in February. Yeah, Ross, you can actually go back to our live streams and watch all of them, and you can watch us talk about that. You can go see the dates that we talked about that. But yeah, back in February, we were talking about the bearish divergences with the market, giving our subscribers warning. We're even actually giving warning at the end of January as well. Then by mid-March, I believe it was. I don't recall the exact date, but I know it was mid-March. That was our final signal to get out of the market. Then after that, actually, you know what? Let's dive into the program. Let's get into VectorVest 7 for a little bit, and I can show you exactly what I'm talking about here. All right, because seeing is believing. All right, let's go ahead. Jump into VectorVest 7 real quick. Oh, got to switch that over. There we go. All right, so now that we're in VectorVest 7, this is a home page. As you can see, I am in real time. The app by default comes on a 15-minute delay. If you want real time to the app, you have to subscribe to the desktop application, and that will give your mobile app real-time data as well. All right, so what we're going to do, we're going to jump through here and get into our graphing here today. And before we take a look at the truth chart that I mentioned earlier, we're going to go to the market timing just to demonstrate this here. I'll reset my layouts, and then I will put on our confirm calls, which is our last line of defense. So what date was this? Let's go ahead and use my cursor. As you can see, here's January. We were warning that the MTIs we talked about, the MTI ratings of 1.5 to 1.6 shows that the market is looking for a top. So that was our first warning around the middle of January. Then all of a sudden the market hit a brand new high right in the middle of February. Well, price was moving higher. Our key indicators were all moving lower, giving us that bearish divergence and giving us that early warning sign that, hey, something bad is coming in the market. Well, if you didn't get out based off of that, our confirm calls, which as we mentioned earlier is our last line of defense, came on the 28th of February. So would that have saved you a lot of money? Most likely the answer is going to be yes. If you didn't get out the 2 times before that, here's your final signal to start getting out. So hopefully that answers your question on, we didn't predict it. We were trend followers, and based off of the trend that we were noticing, we were able to identify that weakness was ahead. On aggressive note, as you can see, here's our first, as a more conservative approach to start getting back in. On a more aggressive entry, we talk about the green light buyer all the time. We put the green light buyer on. Our first entry for our most aggressive subscribers was 3 days after the official bottom. So not only did we get you out on a more conservative basis before the real drop came into the market, we also on an aggressive basis got you in on the 26th, 3 days after the bottom. So hopefully that answers your question. Hopefully that helps you out, and stick around because I'll show you how you can get this information every single night to keep up to date so you don't have to worry about trying to come up with this on your own. All right. So hopefully that answers your question. Let's go ahead and jump into the climate graph, or as we like to call it here at VectorVest, the truth chart. So I'm going to switch it in the upper left from market timing to market climate. And real quick, just give me one moment. Let's go ahead and put that on so you guys can all see me here. All right. So now that we have the market climate graph pulled up, what we're looking at is the earnings overall, the S&P earnings, and then the S&P earnings -VV. So this is essentially based upon a 50-day moving average on the S&P earnings. The way we use or utilize this is by the VV, or indicated by the VV, is that we like to keep things simple here at VectorVest by trying to put things on a 0 to 2 scale. So above 1 means it's good, below 1 means it's bad. The way we look at the S&P earnings -VV is what we like to, or also known as the ETI, or the earnings trend indicator, is that we put it on a scale of 0 to 2, And as long as the S&P earnings VV is above 1, that means earnings are growing, and that means, companies or the markets will continue to rise or continue to move higher. Because earnings is going to be the main engine that drives stock prices higher over time. Well, what happened as of last Friday? We dropped below 1 for the first time in quite some time. What does that mean for you? That means that now the engine or that earnings are not growing. They're now actually starting to contract. Now, granted, most likely a lot of people had an idea that, the pandemic that hit, the closures of businesses is going to have that kind of an effect. But this is the first time we've actually had it confirmed to this date so far this year. Now, let's go ahead. We're going to zoom out and take a look at history and see how accurate this can be for us. So we're going to scroll back all the way, let's say 2006. Let's go back. There we go. So here, let's find the date. That was 1.02, 1.99. So February 15th of 2008. Asif is asking, how often is the climate graph updated? Once a week, every Friday. Great question. Yeah, awesome. Thank you for asking that, because I'm sure I'm not the only one that had that question, or you're not the only one that had that question. Yeah, you're in the right spot then. All right, so if you go back on your own after today's session, go back and look at a graph of the S&P or graph of the Dow or whatever major indice you want to look at, and make sure to check the date of February 15th, 2008. And then look at that and ask yourself, would that have given you an indication, or would that have saved you some money if you started protecting yourself or started being defensive? Now, just because earnings start to contract and, this is a indication that the markets are starting to enter into a bear market, does not mean that you should go sell everything. What this means for an individual is that take advantage of the trend while it lasts, but be cautious out there. Don't expect, smooth sailing until we see earnings starting to grow again. Simple as that. So there, it marked the start of the 2007-2008 financial crisis. We moved forward throughout a few years, and all of a sudden, back in 2015, let's see, where was that date? Right there. March 27th, 2015. We saw another contraction telling us that earnings were starting to fall. Now, if you were a VectorVest subscriber back then, you would have known, you would have read Dr. DeLito's essay most likely, where he talked specifically about what was happening or what was causing that to happen. That was the collapse in oil prices back around that time. And since that point, that was a major shift in the market. That was when, oil companies were going, oil companies were shutting down operations. That's when oil, for the first time throughout the last 15-20 years, hit that $20 mark $20 a barrel mark. And since that point, oil has never been able to fully recover. Granted, we've seen it get to the $60 range, which is what producers say is their optimum output level, or at least their price point to get back in business. But we were there for a little bit. It took 4 or 5 years to get back to that level, and now look where we're at. Oil has been in around the 30 down to the 20s recently, but now back around the $30 a barrel range. So that was a major shift in the global markets and also markets in general, because of how much of an impact that oil shift or oil momentum or oil change had throughout all companies there. Couldn't agree more, Tom. So yeah, we saw a major shift there. And if anybody was trading that time, that downturn or the sell-off that we had in the market was pretty brutal. Not only did we have oil prices collapsing at that time, that drug oil companies' earnings down, but we also had, if anybody recalls this as well, the China manipulated exchange rates, I believe it was, back in the time too. And that also caused panic in the markets and continued to push the markets down even more. And so that's what we're going off of. We have to be, it was a major shift in the market and it caused a major drop in the market as well. I think we had about a 20 to 30% drop in the market at that point. Well, now bring it 5 years forward. First time in a long time, or first time in 5 years, we've seen the earnings indicator starting to shrink again, telling us the engine that drives stock prices higher is starting to run out of fuel, or starting to reverse here, or starting to pull back. And that's really, one of the big things to keep an eye on. So going forward, as we mentioned earlier, this does not mean that you should go out and sell everything. This does not mean that we should, panic and worry, because this is a high view of the market. This is more of a strategic view of the market, whereas market timing that we talk about week in and week out is more of a tactical view on the market. Market timing will allow you to take advantage of these short-term uptrends in a bear market, but the timing will help you avoid the continuation in the downturn if it comes. So going back to what we talked about originally on the homepage, our MTI is getting close to that 1.5 threshold, which shows that the market is starting to get close to those top heavy levels. So just giving us more signs of caution. Market goes up more than it goes down. And also, we always want to be a successful investor. You always want to be an optimist, not a blind optimist, but cautiously optimistic. So as we continue to see the markets climbing, we've came off that bottom here over the last month and a half, 2 months almost. Take advantage of that while it lasts, but just be mindful that the engine that drives the market higher is starting to slow down or starting to run out of steam, and be careful with that. Keep them when adjusting your stops or making trades in the market. Also, some other things this can tell you as well, some tips that, knowing what the overall market climate is, this can also help you, be more mindful of take profits when you're comfortable with them. Don't try to shoot for the moon every time. Be mindful of that. Tighten up your stops. Be a little bit more conservative or more aggressive with your stops. Tighten them up, but don't hesitate to take profits off your position. You can't go broke taking a profit. Simple as that. So, anybody have any questions so far on the overall climate of the market or the health of the market? Also, as a side note, if you guys have any questions, or putting those in the chat there, I will point out something as well. If you are a desktop subscriber, or even if you're not a desktop subscriber, but you want to get more detail or more information on this inside the VectorVest 7, if you want to try VectorVest 7 out. One other nice feature with this is that if you go into the views, you open up the views manager on the left, you get an option for special reports. And in the special reports, let me just find it. The bull bear market indicator. Now, as we mentioned earlier, we are in a K7 bear market as of Friday last week. So this will talk about the different cases and give you all the information you need to know on it. Plus, you have a lot of other great essays to help you better your own trading just in general. Let's see. Reza, I didn't see a question from you. Curious, could you use the app to analyze? Yeah, we will definitely do that, Ross. After this, we'll always get into the fan favorite of analyzing your stocks. Will this video be saved for later? Yes, it will. So on our Facebook page, on the left-hand side of our main page, you'll see an option for live. If you click on that option, it'll take you into all of our live videos or all of our live streams that we've done, and you can see an archive of all of them back then, or all of them that we've done over the years. Could be losing steam, but isn't the general trend any app saying bullish? And that's what I'm talking about, Peter, is, the trend right now, the shorter term trends, the trends of the market are bullish. Yeah, we're seeing the market starting to rise. But at the same time, be cautiously optimistic, because as these effects still hit, that's going to slow companies' earnings down or slow companies' growth down. and that's eventually going to catch up to the overall market as well. Just a fact of life there, if you will. So that's why we wanted to talk about it, and that's what I was saying is, it's not a call to go sell all of your positions. It's simply a warning and a reason to be cautious in the market. A reason to say, okay, if I have a good gain, don't hesitate to take my profit. Maybe instead of a 50% gain that I use as my target, I'm going to use maybe a 30% gain. All of that. And that's what I was meaning by the climate is a strategic look at the market. The market timing is a tactical look at the market. So it's telling us, it's the tool that's going to help us avoid the longer term bear market. It's going to be allowing us to take advantage of these short term uptrends or these, uptrends while they last. But if they start to break down, we know we're in a bear market now. So we'll be able to jump on board or avoid these a little bit faster than if we were in a strong bull market. It's a difference between, okay, we're in a really strong bull market. The market's pulling back. I'm going to hold on to my stocks. I'll ride this pullback out, and then the market will recover. Now, if the market has a pullback, there's less likelihood or, a lower probability, if you will, that the market is going to recover off of those pullbacks now. Granted, we have seen a nice rebound so far. We've recovered about 60% of the total loss that we had throughout this most recent sell-off. But at the same time, there are bounces. There's upturns and down markets, and there's downturns and up markets. We need to know what type of market we're in to adjust our trading plans accordingly. So hopefully that answers your question and helps you out. Love VectorVest for swing and long-term investments instead of day trading, which is a gamble. Hey, there you go. Market timing does climate, timing industry. So market climate, market timing are a little bit different there. So market climate is going to be the broader view. Market timing is going to be more of the down to earth, what's happening right now, technical view. All right. Awesome. Is playing options a good idea at this point in time? Yeah, options are a great tool regardless of what time it is. Once we get into more top heavy levels, we hit those levels that we typically look for. If you're not comfortable with your position, you want to still hold on to it. You could use options to protect yourself. You could use it to, hedge a position. There's lots of different ways you can use options to better your trading. One of the 7 secrets of investing that Dr. DeLito talked about in his essay time and time again, or his not essay, but his presentation that he does whenever we go out on the road, is learn to trade options. Regardless of what style of investor you are, you should learn to trade options. Reza, still haven't seen any question from you. If you got a question, let me know. I'd be glad to answer it here. Still haven't seen one. So I'm not ignoring you, just no question I've seen come up from you. So if you have a question, let me know. I'd be glad to answer it. As always, I don't back down from any questions. Let's see. All right. So also one other side note, let's go back into the climate. One other side note or observation that we've made here at VectorVest over the last few months, or especially in this most recent rally that we've seen, is it's been very narrow-sighted. What I mean by that is it's not a broad market recovery. If you look at what's been driving the market, it's been mostly gold and tech stocks, some healthcare for a little bit, but it's been very, very small with what's really been pushing the market higher. And so that's what, to keep in mind is it's not a broad market recovery that we want to see. I'll get to his question just one moment. So yeah, just let me finish this and I'll answer your question, Reza. So just keep that in mind is, everybody keeps talking about, oh yeah, the market's moving higher. The market's moving higher. We're back to clear skies. Yeah, we have a little bit of worry about, a virus going on, a second wave. But at the same time, the market, if you look at it, health or airline travels, Carnival cruises or, cruise ships, A lot of companies are in a lot of industries in the market have not been able to fully recover. So it's been a very focused recovery or very focused rally that we've seen in the market. Just keep that in mind with what's going on. So that's what I mean by when I'm saying cautious. Don't go out and just buy, any kind of stock that you want to. Buy what's going with the trend currently, but be careful. Make sure to adjust your stops appropriately. And, go back to the 50% rule that we've talked about in the past. Simply put, if anything over a 10% gain in an individual stock, never give back more than 50% of that profit. That'll help you save yourself a lot of headache and make sure you're locking profits in these kind of market conditions. All right, so with that, let's go ahead. Answer that question. NBR, you guys said to short. Well, we went up 30%. When did we say to short it? And there's not a whole lot of information to go off of. So let's go ahead and take a look at it. We'll analyze it together, and then we'll jump into the personal fan favorite of knowing or analyzing any stock that you want to take a look at in less than 20 seconds. We'll do that in the app. So if you guys have stocks you want to take a look at, go ahead and put them in. I know there's a few of them we're going to take a look at here in a second, but let's start off with this one. All right. So are you talking about the sell rating? Because that's not telling you to short. That's simply a rating on a stock, saying it's a bad stock. Look what this stock has done over the last year. Sideways, down, sideways. Now, granted, it has popped off of that split, but you're talking from a low of 979 to 27. Yeah, there's some potential there, but look when that sell rating came in. Oh, let's go back. There we go. It came in at $103. Now it's at 27. So if you bought it at the low and it rose off of 27 when you first came into it, well, first off, that was the 23rd of April. Let's go look at what the market has been doing. Yellows, greens, a few reds, but we look back at the market graph or market timing. Go put on our calls, the green light buyer system, for example. Since March 26th, we've been saying, hey, be long in the market. Take advantage of this uptrend. So if you're going off of a sell-rated stock and shorting it, even the worst stocks can go up in an up market. So if you're shorting a poor fundamentally sound or poor fundamental company in an up market, yeah, the odds are not in your favor. Go with the trend of the market. Don't try to fight the currents of the market. We talk about that week in, week out here on our Facebook live streams. So if you're shorting a stock in an up market, I don't really have any other answer when VectorVest has clearly been stating to be long in the market currently. Now, when the market's going down, yeah, short sell-rated stocks because that tells you have a good probability of the stock continuing to move lower. Those are going to thrive in a down market. VectorVest believes in buying buy-rated stocks in up markets and selling sell-rated stocks in down markets. The buy, hold, and sell ratings are based upon rules. They're not analyst opinions. They're not personal opinions of some guys sitting in a back office here. They're rules-generated, rules-based because we believe in a systematic approach to investing. We've been around for over 30 years and found the probability of success for somebody who's taking a systematic approach in the market compared to an emotional approach in the market has a lot higher potential for gain, but also has a lot higher track record or a lot higher returns over those timeframes as well. So hopefully that answers your question and gives you some clarification that we weren't telling you to short it. We were saying this is a crummy stock, which if we take a look at the graph, I don't think anybody would disagree with me that this is a crummy stock. It's been a sell, hold, a little bit of buy, then sell, hold. Nothing about this stock looks favorable and telling us to short it. It's just saying it's a sell rating. It's not a good stock. It's not doing well. So yeah, it's recovered a little bit, but it's moving sideways more so than anything. I wouldn't call that a recovery or a great move. It's just, it took advantage of a little bit of it took a technical rebound more so than anything substantial. So hopefully that answers your question and gives you some insight as to not only where the confusion came from, but also going forward, how VectorVest can help you better your own investing. By knowing what VectorVest is saying and knowing how these indicators work and knowing what it's trying to tell you can greatly increase your success rate in the market. So glad you're here. Glad, I'm not afraid to answer your question. Hopefully that answers your question in pretty strong detail. Hopefully you come back next week and hopefully you stick around because we'd be glad to help you get your portfolio on track, avoid these kind of mistakes, and be able to benefit from it here. All right. So hopefully that helps you out. Let's get into it. Let's go ahead, jump back into the app real quick and get into the fan favorite. It is that time, folks. All right. So back in the app, as you can see, we talked about it in the views. Every single night you get the views. You get Friday's views on Fridays, obviously. So if you want to get into it and take a look or keep up to date with what we talked about in the desktop application, you can get that information here every single day in the VectorVest views. Once again, to get to them, you go to the More button at the bottom and choose VectorVest views. Or if you want an easier way of doing this, just simply going to the homepage and watching the daily color guard report on a nightly basis will keep you up to date with all of this as well. That way you never get caught off guard and you can take advantage of this. All right. So with that, Ross had the very first one with Microsoft. I'm not going to forget you, Ross. We'll start out with Microsoft and get into the analysis of your stocks here today. So MSFT, if I could type. Once again, fat fingered that one. All right, MSFT. Give me one moment here. All right. So to do the analysis quickly and easily, we look here at 4 key indicators that VectorVest uses to help simplify the analysis of an individual company. All 4 of these indicators are going to be cast on scales of 0 to 2. So, first one is RV or relative value. The RV is looking at the long-term potential of a stock compared to a AAA corporate bond. The RS is looking at the consistency and predictability of the company's financial performance, or simply an indicator of risk. The RT is looking at the short-term price trend. The VST is a combination of those 3, something unique here at VectorVest that you're not going to be able to find anywhere else because it combines the power of fundamental and technical evaluations. So, RV, long-term potential above 1, good long-term potential. Safety at 1.35 shows good consistent fundamentals. RT of 1.60, really nice, strong short-term uptrend. So yeah, overall the stock is favorable. That was your daily short list. So Reza, the short list, regardless of whether that has a buy, hold, or sell, never fight the trend of the market. Simple as that. Don't fight the trend of the market. I don't know how else to state that. Go with the flow, my friend. All right. Let's get into the next stock here. So yeah, Microsoft looks good. SE, let's go take a look at the next one. C Limited, poor long-term potential, some additional risk associated with it, but really, really strong momentum. Excuse me. So we would consider this to be more of a speculative trade, a momentum trade. If you're not a momentum trader, stay away from it. Simple as that. But if you are a momentum trader, that's why it has a VST overall greater than 1, because of that really strong momentum right now. So if you're a momentum trader, this is a great opportunity here. We don't say short on the app. Reza, give our support a call. Let our support work with you and answer those questions and help clarify the confusion here. Because apparently there's more to this than I am getting from what you're saying. So give our support a call. They can work with you one-on-one, answer your questions, and really help clarify that confusion that you have. All right. So next one, DraftKings, DKNG. There we go. Speculative trade, obviously. Brand new stock, hasn't been trading for very long. So poor long-term potential, a lot of risk associated with it, but it has some momentum because, hey, it's a big popular name. People are looking at it. So timing's been pretty good. Overall, it's a speculative trade, momentum trade. If you're a momentum trader, take advantage of the momentum. If you're not, if you're more of a prudent to conservative or fundamental trader or investor, obviously stay away from this one so far. All right. Let's see. Shop. Let's go ahead and take a look at that one. So Shopify, poor long-term potential, but really solid fundamentals. So more of a conservative play, if you will. But money goes where money grows. And right now, people have been putting their money into safety and avoiding the riskier assets in the market. So because of that, you've seen a really strong push in momentum recently. So overall, this is definitely favorable. All right, next one, Kinross Gold. Hey there, Steve. Welcome. Glad to have you here. KGC. Kinross Gold, great long-term potential, but a little bit of additional risk associated with it. You know, it's gold related, and gold for the longest time hadn't been very favorable. So their fundamentals of their earnings reports have been a little inconsistent on the longevity standpoint. So RS right below 1, a little bit riskier than the average stock out there. But look at the timing, 1.83, great momentum. So overall, this stock's favorable. See these graphs in MacBook. Hey Isaac, I'm on Windows here. My MacBook is at home, unfortunately. What is the reasonable price to place limit order for DXCM? So if don't ever chase a stock. Put in a stop, whatever you're comfortable with. Don't chase it. I've learned that lesson the hard way. Don't ever chase a stock. If you don't get it, move on. There's plenty of other stocks out there. Don't go chase a stock. AZN. Let's go take a look at AZN, AstraZeneca. Poor long-term potential. A little bit better than average safety, though. Really strong uptrend right now, so overall it's favorable. Let's see. mRNA. Yeah, that was the one. mRNA. I saw that earlier. I wanted to get to it. mRNA. Poor long-term potential. A lot of risk associated with it. This has been a speculative play. We've always known this all along. Speculation. What was the speculation on this one? That there was a possible vaccine that they were coming up with or a possible treatment for the COVID-19. Well, they went off a really small sample size. And as data came out more and more, people were speculating that that was going to be true. Well, now that the speculation has kind of been proven false, you've seen a big drop so far in it. So there's a speculation on it. Overall, on a short-term basis, yeah, it's still in a really strong uptrend, but that RT is definitely falling closer to 1 rather than continuing to climb at this point. Let's see. INO, sure. INO. Also, if you guys have been enjoying yourselves, if you guys are still around and having fun here today, make sure to hit that like button. Make sure to turn on notifications on the Facebook page and make sure to share this video with all your friends, all your family, so we can continue to grow this group of awesome people every single week, week in and week out. All right, so with INO, poor long-term potential, a lot of risk associated with it. High momentum, we knew that. It's been high momentum for quite some time. All good things come to an end, so be careful with the momentum. You know, momentum players know that there's a time to start calling your trade and closing it out, taking your profit. We're definitely seeing, big moves higher and lower. And if you're a momentum trader, you're most likely getting out on these big moves lower, waiting for that dip or waiting for a possible new entry, but definitely not riding it down right now. These are not long-term plays. These are speculative trades, momentum trades. All of these stocks, INOs and mRNAs, are only because of what's currently going on. They're news-driven. They're emotionally driven. They're not fundamentally driven right now. Keep that in mind, folks. Hey, we're not on YouTube, Jay. Mug does not apply here. All right, CRSP. SP. There we go. Fat finger right there, fail. All right, CRSP, poor long-term potential, a lot of risk associated with it, but once again, same situation, a lot of momentum behind it. Overall, it's favorable if you're an aggressive momentum trader, but if you're not, just simply stay away from it. There's better ones out there for more prudent to conservative investors. And Microsoft's a good long-term. Yeah, I agree with that. We did KGC. Let's get into Square SQ. I love Square personally. It's a great stock. Just not great fundamentals, though. Poor long-term potential, a lot of risk associated with it. Timing, it's been a hot momentum play, especially being in the NASDAQ, so you're catching a lot of, good wins with that. So overall, it's favorable. Let's see. TCNFF, TCNNF. Oh, excuse me. There we go. All right, cannabis stock. All right, great long-term or good long-term potential. A lot of risk associated with it, though. It hasn't been around for long enough to have a proven track record. The longevity aspect of it. Timing 1.78, really, really strong uptrend. So overall, stock's favorable. RMD, let's go take a look. ResMed, poor long-term potential, but a little bit better or a little worse than average long-term potential. Let's say it that way. But great safety, great fundamentals, consistent fundamentals. Good timing. Maybe pulling back a little bit, so maybe not the best entry right now, but hey, market timing is telling us not to be getting into anything right now. Overall, stock's favorable, but I'd definitely be careful keeping an eye on that timing, seeing if it's moving higher or lower. Let's go ahead and take a look at that real quick. So we zoom in, let's say 1 month. Just something to be mindful of. RT has been pulling back. Just keep that in mind. Be careful with that. And once again, the 50% rule should always help you out with something like this. All right, let's see. Tesla, TSLA. Tesla, about average long-term potential. Good fundamentals. Really, really strong momentum currently. So overall, stock's favorable. HELE. And also, why I'm doing this, just keep in mind, folks, market timing that we saw on the homepage there trumps any individual ratings on a stock. So if the market timing is telling us not to buy today, doesn't matter whether it has a buy, hold, or sell. Simply hold off from buying it for the day. Wait for a better day to be buying. Simple as that. Don't need to read into it too much. Just make your life easier, make your investing easier. All right, so looking at HELE, great long-term potential, solid fundamentals, really nice, strong momentum play. Overall, this stock is definitely favorable. Let's see. THW is a dividend stock. Let's take a look at that one. THW. So this is an ETF, not a stock, an ETF. So with ETFs, there's no earnings, quarterly earnings reports that they come out with. So therefore, the fundamental indicators like the RV and RS, they're always going to be pegged at 1. Whenever looking at an ETF, the main focus is going to be the RT or the timing on it. At 1.7, it's greater than 1, so yeah, it's definitely favorable right now. Facebook, FB, good long-term potential, solid fundamentals, really nice strong uptrend. Overall, stock's favorable. FI, great long-term potential or good long-term potential, but a lot of risk associated with it. The timing is not there. So therefore, the stock's not favorable. It's been in a steady decline for quite some time. ENPH, great long-term potential, solid fundamentals, really nice strong momentum play. Overall, the stock is favorable. JKS, great long-term potential, a lot of risk associated with it though, so it's a aggressive trade, if you will. Momentum on an aggressive trade is not there, so therefore you'd probably be staying out of it. Overall, the stock's favorable, but closer to average more so than truly favorable. CIG, sure, let's go take a look. All right, looking at CIG, you have really strong upside potential over the next 1 to 3 years with this stock. But to get that potential comes with a lot of risk. Looking at the timing, 0.38, not the time to be into it. Therefore, the stock's average. On an aggressive trade or a speculative trade, you have to have momentum on your side. So Israel is asking, does the app have alerts if a stock reaches a target price? The app does not have that alert system in there. The desktop version does have alert systems using the portfolio features, but it's not based off of a target price. It's based upon a stop criteria that you would set up on that position. David is asking, how important is value being greater than price to you? Also compared to RV. All right, so David, great question. Awesome question. So value or price being greater than value, so therefore an overvalued stock, uh, really isn't important to me. But that's because I'm more of a short-term investor. I'm more of a short-term trader, if you will. I'm not investing. I'm not in a retirement portfolio most of the time. So therefore, stock being overvalued isn't the biggest concern to me. Now, if I'm looking to get into stocks for my retirement portfolio, yeah, I want to see typically that they're undervalued, but if they are overvalued, it's not necessarily the worst thing in the world. It just means that I'm paying a premium on those stocks at the time. Which, I mean, right now with everybody moving into more fundamentally sound companies, you're going to see, a premium being paid on those because that's where everybody wants to be right now. So, a stock that's overvalued isn't really the worst thing to me. I do want to see RV being greater than 1 because RV and the value are two completely different things. The value is stating what a company is worth right now based off all the current fundamental data out there. The RV is looking at over the next 1 to 3 years and comparing that to, a more conservative investment like a AAA corporate bond and saying which one has more potential. Either putting your money into a AAA corporate bond or putting your money into, that stock. That's what it's saying. So they're really looking at two different aspects of the stock. But yeah, that's a great question, and a lot of people have that confusion because both are looking at values. Just one's looking at value today, one's looking at value over the next 1 to 3 years compared to a corporate or AAA corporate bond. Where can you find the definition terms in VectorVest 7? So Deepak, when in doubt, right click. Right clicking will provide you with a vast amount of tools and a vast amount of information. I'll quickly go to that while we're looking at it here. I'll go into, let's say, the viewers, go into the stock viewer. You can see this right above me, what I'm doing. Stock viewer, anybody not familiar with it, is just simply a listing of our highest VST rated stocks. When in doubt, right click, view the full stock analysis report. This will give you the definitions, all of our indicators, how they fare on those indicators, and what type of information we look at. Now, getting into the mobile side of things, you can also do this on your app. Let's go ahead and take a look at the next one. RGEN or REGN. If you go to the three little dots in the upper right, you can go to the view report. And as you notice, you get the same report that we just had in the desktop. So this is something, regardless of whether you're desktop or mobile, you can get access to these reports on any stock that you want out in the market. Same exact report you're going to find in the desktop though. All right, so let's go look at REGN. So great long-term potential, solid fundamentals, really nice, strong short-term momentum right now. Overall, the stock is definitely favorable. All right, and we'll do two more and then we'll start to wrap things up. Hey, glad to have you here, Glenn. Thank you for that. Also, if you guys are not familiar with Glenn Tompkins Jr., he does a lot of our training on our YouTube page. If you've never checked that out, make sure to head over to youtube.com, type in VectorVest, subscribe to the channel. And he does training Thursdays. That's at 2 p.m. today. There's a lot of twos in that he likes to use, so it gets kind of tongue twistery. But he's very knowledgeable, knows what he's talking about. Been here for years, great guy, so great personality as well. And if you ask him nicely, he may even sing for you or tell you a joke. So something I don't do here, but if you're looking for that, head over to our YouTube page, turn on the notifications, subscribe to that as well. Great content over there that you guys can always enjoy. All right, let's see. Does the app analyze stocks on the TSX exchange? Ross, yes, it does. I'm in the US exchange right now. If I was on my main account that I use for my desktop, I would be able to go to the more settings here. I'd be able to tap on the US flag, and then I'd be able to change it to whatever market I'd like. If you're already in Canada, then you'll have Canada and US, and that would be how you would change it. Let's see. Corey, I'm gonna skip over that one. I sense the sarcasm with that. Not gonna try to push that one. All right, spot. Let's go take a look at spot. Go to the magnifying glass, SPOT. Spot, poor long-term potential, a lot of risk associated with it. So speculative stock, but really strong momentum right now. So once again, a lot of stocks we looked at today are very speculative, but if you're a short-term trader, short-term momentum trader, you can definitely take advantage of these opportunities and make some short-term gains, but definitely not going to be a stock that you buy and hold for the long term. All right, one more. Let's see what it's going to be. Enphase, we looked at that. CCL, let's go look at CCL. All right, Carnival. Poor long-term potential, a lot of risk associated with it. Timing is not there, so overall the stock is not favorable. Now, I know it's been hit extremely hard throughout this pandemic, and it hasn't recovered. So what are we looking for on a recovery? That's why I wanted to talk about this one when I saw it. Let's go ahead and pull that up. We've mentioned it in the past, using technical analysis, such as support resistance, DPO, MACD, lots of different technical indicators that you can use inside the app. But let's go ahead, rotate it here. You guys can see this a little bit better. Oh, gotta get it. There we go. As you can see, ever since about March 20th or so, CCL and a lot of airline stocks, a lot of cruise liner stocks have really just been moving sideways. Wait for not only the RT to cross above 1, if you're wanting to, see a little bit more consistency, but wait for a breakout out of this sideways price action. Right now, hold on, let me just adjust this real quick. Let me turn support resistance off so you guys can see it a little bit clearer here. Now, for anybody that's in a jockey club that's tuning in today, I see a few of you guys in here. I have a feeling you know exactly where I'm going to go with this. But since March 26th or so, we've had lower highs, but higher lows. This is a consolidation pattern known as the Wicked Wedge. We've talked about this in previous live streams here. Use some line drawing tools, whether it's in VectorVest or whatever graphing you use. Draw those lines. Wait for that breakout out of this consolidation pattern to the upside, and that would be the most aggressive, earliest opportunity to jump on board with these. But if you are jumping on board at that aggressive time, just know you are assuming more risk to try to get that higher reward. If you want to see a little bit more consistency, want to be a little bit more patient, wait for that RT to climb back above 1. That could be confirmation, if you will. All right, so great stock. Thank you for putting that one in there. I like analyzing some of the more tricky stocks out in the market. Not just the best of the best, but I like looking at some of the worst performers too, because that helps people learn, helps educate people. And that's really our goal here every Thursday, is to educate you guys, make you guys better investors, more consistent, successful investors, and eventually, be able to free up your time to go out and enjoy the things you'd rather be doing rather than stuck at a computer all day long. So on that note, it's been my pleasure being with you guys. Thank you all for tuning in today. Have a great rest of your day. Have a great weekend. And we will see you all next Thursday at 11 a.m. Eastern as we kick off another round of our Facebook Live sessions here. So take care once again. My name is Patrick France. Have a great day. See you all next week. Bye for now, everybody.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.